As per regulatory norm, KYC is very important. But what I feel, KYS is equally important. Surprised to know what is KYS? KYS is nothing but knowing yourself. Either you are a conservative investor or an aggressive investor. You are a trader or a pure investor. Knowing yourself is equally important. We always see there is a mismatch in the market between an investor and the investment product, between a trader and its trading strategy. It is going to create a big problem for your overall investment portfolio. So how do you know that you are a conservative investor? If the short-term market volatility in an equity market bothers you much, gives you sleepless nights, or creates a discomfort for you, then you are a conservative investor. How do you know that you are an aggressive investor? The short-term volatility doesn't bother you much. You keep adding funds to your portfolio despite the volatility into the equity market, then you are an aggressive investor. If you are a conservative investor, you should have lesser exposure into the equity-oriented investments. But if you are an aggressive investor and having a long tenure of investments, you should always take the benefit of equity exposure. The mismatch is exactly created there. A conservative investor takes the maximum exposure into equity because it yields higher returns. But it should not be the case. Higher volatility creates higher impact to the conservative portfolio, or the higher volatility creates the maximum impact to the equity portfolio. An aggressive investor might have got maximum exposure into the debt-oriented funds. He ends up yielding the lower returns from the market. So this mismatch should not happen to your portfolio. Conservative investor should have adequate exposure into the debt-oriented products. That will give you the stability to your investment portfolio. The aggressive investor should have maximum exposure to the equity-oriented funds that will generate moderate returns in a longer duration time. So how you can solve this mystery? The simple thing is knowing your product.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
So you must have heard this line multiple times, but have you ever focused on what type of investment risks are involved? Have you ever observed what all documents are to be read? That's exactly the KYP, knowing your product. There are many products available in the market, such as mutual funds, PMS, market-linked debentures, NCDs, mutual funds, so on and so forth. That's what creates a lot of confusion while choosing a right product for the investment. But exactly how to choose this product? There is always a disclaimer that says that you should read all scheme-related documents carefully. Does the investor really get time to go through it and refer these documents? So that's where we are here to help you to know your product. So how to know your product? So if you have invested into mutual funds already, so do you really know that product? If you're already an PMS investor, do you really know about that product? How will you come to know about it? Let's talk about mutual funds. Mutual funds are subject to market risk. Please read scheme-related documents carefully. So what are those scheme-related documents? Let's understand those one by one. Fact sheet, scheme information document, key information memorandum are the scheme-related documents. So what fact sheet tells you? Fact sheet exactly tells you the top 10 holdings of the funds, objective of the fund, who is the fund manager, since when he is managing the fund, and what exactly the allocation is. Scheme information document tells you about the risk associated with the fund. Likewise, the key information memorandum gives you the brief about the asset management company, the terms and condition of the fund. So that will fulfill knowing your product. So in PMS, you need to understand the strategy, approach, fund allocation of the investments. How you will find that? So you need to refer the fact sheet of the fund regularly. National Pension System, it's a well-structured product available to create the retirement corpus. How to know about this particular product? It has different strategies such as auto, active and balanced life strategy. Alternate investment funds is just like your PMS structure. It has different categories like category 1, category 2 and cat 3. Category 1 AIF is absolutely the underlying assets or new ventures where the fund will be deployed. Cat 2 typically invest into InvITs, which are the investment REITs and real estate funds. Cat 3 is very aggressive as it deploys funds into the derivatives. How you will come to know about it? Just like it has a fact sheet and you will get all the information related to AIF into this. Market linked debentures. MLD is a well structured product. It is getting popularity among the high ticket size clients because these are the structured products. MLDs are market linked debentures. They are having both the exposures, equity as well as debt. That's what helps you to protect your corpus. Market linked debentures are well structured. They come with the different tenors like 18 months and 42 months. MLDs are having the highest popularity in the market because it helps you to protect your corpus despite the volatility in the market, and it has a potential to outperform the index because it has the exposure into Nifty. Non-convertible debentures typically has the structure to invest into the debt side of the corporate, and NCDs are well designed for the defined tenor. We completely understand that there are many products available in a market. That's what creates the confusion among the investors while choosing a right investment product. But don't worry, Prospera is rightly there to help you and to take you to the right product for your right financial needs. Please feel free to reach to us to know yourself and to know your investment product. Thank you.
Check our website www.prosperaindia.com. Prospera. Trust, invest, prosper.